Good day, traders and investors. Hope you're all well. It's Will back with another one. So today I wanted to look at three stocks that just reported earnings yesterday. We're going to take a look at PayPal, AirBNB, and Palantir, which are always crowd favorites, and see whether or not on the fundamental basis and the technical basis, they are ripe for a buying opportunity, or is it time to sell the stock? Let's take a look. Now, we're going to start off with PayPal here because PayPal was one of the ones that was kind of a head scratcher here, but is one that I really do like on both a fundamental and technical level. So getting into the earnings first, just going to go over this quick, guys. They did have a double beat, as some of you may know. So they did beat on earnings per share, $1.08 versus 96 cents expected. And they did also beat on revenue. So 6.85 versus 6.82 expected. Now, these were really good beats, and they also did increase guidance for the remainder of the year. However, it did fall slightly below Wall Street's expectations of what guidance could have been, but PayPal did do a great job of cutting costs, and this was one of the major things that they were kind of criticizing about the earnings, is that most of the earnings came from PayPal's ability to cut costs and not necessarily from growth itself. But all in all, I mean, that's a positive. If they were able to cut costs, especially leading into a recession, they could be poised to be positioned really, really well. So as we can see here, a couple little headlines. We have ongoing productivity initiatives, right? 8 to 10 million net new users in the year, which is very, very good. And also, major headline is that they were supposed to work with Apple on an ongoing basis to increase offerings for PayPal and Venmo. So as you can see, for customers to accept contactless payments through their mobile wallets, adding PayPal and Venmo network branded credit and debit cards to the Apple Wallet. So that's very, very good, because a major point of contention for a lot of people looking at PayPal is Apple going to eventually eat their lunch? Well, obviously, in this case, we do have a potential partnership between the two companies in a mutually beneficial fashion. So that's always great to see. So they did beat, once again, top and bottom line beat, but Wall Street was slightly disappointed with the growth expectations for the company. And we're going to look into that a bit more. So a bit more on the fundamentals, guys, before we do get into the technicals, right? As you can see, the stock has gotten absolutely crushed from its all-time highs. We're still down currently about 80% almost to the downside from our all-time highs. And keep in mind, we're going back now to about October 2017 prices. So we're now in what I like to call time machine prices, guys. Prices we haven't seen in 6 years. And as we know, PayPal in the last 6 years have definitely grown their revenues. So let's go take a look to see if it's actually an advantageous buy. So I'm going to go over these metrics really quick, right? So revenue growth, as we can see, imagine we put ourselves back in roughly September, October 2017, right? Back then, the company was making about $12 billion in revenue. And currently, we're making over 27. So they have doubled their revenue in the past 6 years, but we are at the exact same share price. So this is when I start to get really attracted to stocks, is when discrepancies like this happen, when they're trading at a price several years ago, yet they've doubled or potentially tripled revenues and earnings. So keeping in line with this, as we can see, steady revenue growth, which is what I like to see. Yes, you can kind of say that it's kind of diminishing as the company matures. But I mean, guys, almost $28 billion in revenue for last year is nothing to shy away at. That's very, very, very good. In terms of, if we look at in terms of gross profit, that's obviously been kind of maintained at the same dollar amount, which is a bit negative, because if they're growing revenues and their profit and their operating profit is kind of staying the same, that means that net margins are slightly down. It's really good that they're not actually dropping net income by too much. They're kind of maintaining the same. As we can see on a quarterly basis, we are doing a very, very good job here. But when we come into the actual net income section, that's when you see it drop, right? Because they're making more revenue, but the same amount of net income. Well, you kind of have your total profits either stagnate or slightly diminished. However, this company is still bringing in almost $4 billion a quarter in profit, which is very, very, very good in my opinion. And you can see that as well on the net income chart. Obviously, it's dropped off. This was the, if you look on the calendar, on the time here, right? So this was 2021. So this is when a lot of companies, a lot of tech companies did bring a lot of revenues forward in that massive bull run that we had in 2020, 2021 with free capital. Rates were pretty much at zero and a lot of stimulus checks. So if you look at this, I just want to go over a few ratios here that are notable to me on PayPal, right? So we do have earnings per share that is slightly down compared to what they were in 2021. As you can see, this was kind of like the balloon bubble, but now they're what they were pre-pandemic. So it's really in line with what this company should be actually doing if they're not pulling forward a few years of revenue. And if we can see now the share price, this is a trailing PE, so the PE ratio in the past. But if we do a quick check for PayPal's earnings estimates into the future, we'll see that the PE ratio, like if we just do a quick PayPal forward PE, it's actually very, very low at this point, right? So the forward PE for the next year and a bit is only about 13.5, which is very, very, very good, guys. I mean, this is a very low price to earnings ratio. If they do keep growing for the remainder of the year, 2023 and into 2024, and their share price doesn't move by much, that means that their PE ratio is going to be very, very, very attractive. So that's why I'm interested in PayPal. They're a great company. They're growing their revenue on a consistent basis. Their earnings are not dropping despite not growing much. Their net income is staying relatively the same, which is very, very good. And their price to earnings ratio, as a matter of fact, is getting more and more attractive at these prices. So very, very, very good. What I also wanted to point out to you guys on one last thing, whoops, this is the wrong one. What I wanted to show you guys is their shares outstanding. So they did announce a few buybacks potentially for this year, anywhere between $2 to $4 billion in buybacks on a contingent basis, meaning if they do well, that's what they're going to do, buy back shares. And as we can see, guys, since inception of the company, right, we have had this line coming down is shares outstanding. So we now have almost half the amount of shares that we had, or I'm sorry, we're now down about 10% of the amount of shares that we did have at the start of the company, right? 1.2 billion shares. We're now down to about 1.15 billion. So that is a very, very good decrease. They are decreasing their shares every single year. So we do not have dilution. We have the opposite. They are taking shares off the market and reinvesting into their own business. This is what I like to see. I like to see positive revenue, decent margins, right, with operating income. And I love to see when a company is able to buy back their own shares and remove those shares from the market. Now, if we look on a technical basis, like I was saying, we're back now to about 6-year lows. So this is very, very good. What we were doing here is we were building this very long and wide tightening range, right? Pretty much since last July. So it's almost a year in the making, about 10 months in the making. Unfortunately, we did break our support here earlier at around $67. So now we're below that. And as you can see, guys, on the daily RSI, we are pulling down here towards the lower end of our range. So this green box does represent my ideal location for buying PayPal in terms of a valuation metric, right? I just wanted to show you guys that if we look here on one of these tools, it's a very good tool. I love this tool. It's called alphaspread.com. If we look at PayPal specifically, you will see that in all cases, the worst case, so they do 3 cases, right, in terms of valuation. So they do discounted cash flow analysis and a couple other analyses that is able to give them a fair value for the stock. So you can see the worst case is $83. Their base case is $111, and the best case is a bit over optimistic in my opinion, but definitely like we're trading considerably below. We're trading almost half of the base case scenario in terms of intrinsic value when we look at all fundamental factors. So on the technical basis, what I'm looking for here is I'm looking for us to continue to be oversold. If we can go down and almost hit daily oversold, because we can see this is a big momentum candle 12% in one day. They absolutely took out everybody's stops over the last year who had stops down there. And that's good on a technical basis if you're looking to buy, right? You're looking for, at this point, seller's exhaustion. I would be very interested in starting a position. I did write some options on it today, right around the $64 mark. I will be very aggressive in terms of this because it's getting to a point that I really like. Our 4-hour is severely oversold. Our 1-hour RSI is obviously crushed. And you can see we closed towards the lower end of the day. Usually I like to give it a few days for earnings to play out. But what you'll want to see in order for this to turn around is eventually, let's say for all intents and purposes, this is the bottom, right? Just to illustrate, what we need to see first when all the lower time frames are pointing down, we need to first see an hourly trend reversal. When we start to see an hourly trend reversal, we can then look up on the 4-hour to see how high bulls are going to push back into this move before potentially setting a 4-hour trend reversal in motion. And that then carries on to the daily time frame. But we have to go one time frame at a time. You have to wait for the lower time frames to start to bottom. So PayPal, I am very, very interested in this stock. As I said, these are pretty much time machine prices, right? We can go back to 2017, and this is when I love buying stocks. When the fear is there, the technicals look very, very good. The company is still growing, right? The analyst expectations for this, just to give you guys an idea, right? So I showed you the fundamental, the intrinsic value, right? Bear case is about 88. The medium term case is about $111. And as you can see, guys, look at these analysts, right? Average price targets are anywhere between 97. Oh, I'll give you the average, right? About 97. The low end is 75, where we just were before earnings, and the high end is about 160. But look at the analysts, right? We have 47 analysts, and none of them are selling. Strong buy 29, buy 5, and hold 13. So we have good technical levels to be basing ourselves off of. Yes, we're below support, but we're at multi-year lows. Like I said, PayPal was making half the amount of money as it was when it was back here than it is right here, and the price is the same. So good technical level, right? We also have a very good fundamental level in terms of the valuation, which is really, really low. And we also have analyst estimates, which are all to the upside, targets all to the upside. So this is one that I really, really like. It's unfortunate for everybody holding PayPal. I know it probably hurts, but if you don't have a position in PayPal yet, these are some of the things that you can look out for in terms of when you're looking for stocks. You need to look for a confluence of different factors that gives you an idea that, okay, this company is getting to an attractive level. And for me personally, this is where I'm going to start building a larger position in PayPal. It's one that I think will do fairly well for the next 5 years. Now, moving on to our second stock, AirBNB. AirBNB, right? It was a bit of a tricky one. So AirBNB, I was saying in my daily market recap videos that I wanted to write some options in the 109 to 111 area. Well, lucky for me, that's pretty much exactly what happened after earnings, right? So we're all the way down to about 112, and I wrote some options here in the 110 level, so remains to be seen if I will be assigned for the week, but I do not mind owning AirBNB at these prices. On a technical basis, we are looking at support here, and this price level, right? You would have been able to get this price a few times in the past, right? But at this point, you get some price targets almost about a year old. It did go lower, obviously, but in no means is this a somewhat bad level. We're still towards the lower end of the level. So looking at AirBNB, just the earnings fast, you can see that it's another double beat. So we had EPS coming in at twice the expected value, 18 cents, so profitable earnings per share. And we also had a beat on revenue. So another double beat. As we can see here, a few headlines, right? Strong start to the year. Looking forward to another strong travel summer season. However, there is always a dip in travel companies and travel as a whole in these first half of the year, first third of the year, roughly. People tend to travel less between January through April, unless it's spring break destinations. That's just kind of the way travel has always been. So it's a bit of cyclicality here, right? So they did put out some fairly good guidance for the rest of the year, right? Nights and Experience will have unfavorable year in Q2 as we overlap last year's demand from COVID. Last year was the big come out to travel from COVID afterwards. So it's tough to compare against those levels from last year. But despite all this, they did say that their average daily rates were kind of flat here. They said active listings did increase, so we have more people using the platform, which is relatively good for exposure. It may not be good for each host individually as they have more competition, but it's good for Airbnb as a whole, right? So gross booking value, which Airbnb uses to track host earnings, service fees, cleaning fees, and taxes, totaled $20.4 billion in the first quarter, which is absolutely huge, right? 121.1 million nights and experiences booked up in the first quarter. That is absolutely massive, up 19%. So they are growing in terms of exposure. Customers do still like them, right? So these are very, very good metrics for Airbnb. They did say that they will have a good year, so they did guide up. They didn't guide up tremendously, but they did say that 2023 should be a fairly strong year as a whole. So now if we go into some of their metrics, some of their financial metrics, right? I do want to show you here our revenue, right? So our revenue for since inception pretty much here, since its 2020 IPO, has been fairly bullish. As you can see, we have now almost getting up to a triple. In the next year, this will pretty much be a triple. So as you can see, since inception over the last 3 years, we've grown revenue from 3.37 billion all the way up to 8.4 billion in the most recent year end. That is absolutely huge. If we look at gross profits now, gross profits as well, we can see that they have been steadily increasing profits. And this was a point of contention when they launched. I remember people said it's not a profitable company yet. Remains to be seen if they can turn it into profit. They were comparing it to Uber. Well, now this is finally starting to play out. So as you can see, we have very, very good profits here at 6.9 billion for last year. Very, very strong in terms of what they've been able to do. If we look at the operating income, so the amount of money, this is the net income, so not gross profits. This is the amount of money they bring to the bottom line. As you can see, their moment of to shine was basically mid to late 2021 when they finally turned it into a profitable company. And since then, they have not disappointed. They've been able to grow their bottom line steadily every single quarter since. So this is what I love to see, a company that is not only growing revenues, but also growing net profits. That's how you know that they're growing in the right direction, that it doesn't, that their revenue is not, that their earnings is not coming as at an expense, right? That the revenue and expenses are not going higher than their revenue, which is very, very, very good. That was a problem that Amazon had for a very long time and still continues to somewhat have that problem. So if we look at the net income, which is pretty much the same, right? I was showing you guys the operating income, right? So steady profit to the bottom line. Very, very, very good. If we look at the price to earnings ratio, right? As we'll see, because they have been earning more and more money, right? Despite the fact that their share price is down significantly from their all-time high, their PE ratio is getting to be fairly attractive. And if we look at the forward PE, which is considering next year, right, we can see that the forward PE is even lower. So you are paying slightly lower for Airbnb's growth. They're growing very, very well, between 20 and 30% per year in terms of revenue. So their PEG ratio is slightly over 1. As you can see down here, it's about 1.8. So that's very, very, very good in terms of a PEG ratio, especially for a company that is growing so much, right? So very good metrics on Airbnb. I like this company a lot. Ever since they've become profitable, it's very, very, very good. They're putting up very, very good financial metrics, right? As you can see, like the profit margins are good now. They used to be down in the dumpster, so to speak, and now we're pumping up like 20% net margins, which is fantastic, right? That's all you can ask a company to do, is continue to put out positive net margins, especially if they're growing at a fast pace. Now, on a technical basis, like I said, we are looking for support here down in the 110 range. If we lose the 110, unfortunately, we will be losing the weekly uptrend pattern at this point. So we are kind of stuck in a range, right? We are kind of stuck in this trending range here. We were looking for a continuation of the weekly uptrend. It didn't happen. So our target line up here for resistance around the 130 area We need to get through that. Why is it such a big level? Well, because if I just take this line and move it up, look guys, look how many times we rejected on this as support around the 130 mark. And then when we finally broke it, now we've been kind of testing that level just as many times. So this is a very, very, very important level. Unfortunately, we were not able to break this level with our current earnings today. So tomorrow we will open around the 110 mark. It remains to be seen if we will be able to hold this level and if we'll be able to keep this chart alive. What you want to see at this point is you want to see a tightening range. If they can continue to tighten up and hold around 110, that'll be very, very good. However, if we do roll over and come into a low and set a lower high compared to our high here, then we may be in for a weekly downtrend. But I will be looking at this chart very, very carefully on the daily to see when sellers are exhausted, right? So because we're so low on the, if this continues tomorrow, we'll be 4-hour oversold. We are already 1 hour oversold at this point, but we're looking for seller exhaustion, similar to PayPal, right? So we want to see sellers get exhausted. When they do get exhausted, how high can our lower time frames push? And then can they hold for a higher low to reverse the downtrend at that point? So very, very, very important, guys. The 1 and 4 hour time frames are our guides at this point. You need to see them reverse at a certain point. And as soon as you see that lower time frame reversal, that will be a good opportunity to be scouting our weekly higher lows potentially for potential resumption of a future uptrend. So keep that in mind. We always look at the lower time frames to reverse first, and then look how it can play out into the daily and weekly chart. Now, the last stock that I wanted to cover for today is the crowd favorite, Palantir. Palantir, I do own Palantir myself. I have been opening a position and DCAing into the position pretty much for over a year now. I really liked it under $10 just because I knew that this company, as Alex Karp, the CEO, has been saying, would be a profitable company. They do have a lot of different revenue consumer streams in terms of the different business sectors that they do cater to, right? So it was never a question to me of whether or not this company would be profitable. It was only a question of when. And luckily for us, they now have recently put in 2 profitable quarters in a row. So this is very, very, very good. We had obviously our first profitable quarter last quarter. As you can see, this was the big pump last earnings, and this earnings as well. We just put out a positive quarter. So very, very proud of what the team at the management team was able to do at Palantir. Now, okay, so some headlines here, right? So we are up 28%, right? You probably saw it on the charts today. Massive, massive, massive rally, up 23%, pretty much, you know, crushing the bears to the upside here. Short sellers must have gotten absolutely crushed on this. If we see also a double beat. So all 3 companies we've covered today was a double beat, but only Palantir was able to really get that rise because they provided the guidance that Wall Street wanted. So it's all a question of guidance here. When we're going into recessionary times, you have to be very, very careful about the guidance that is given. It's key. Like, you've seen double beats this entire season go negative because of poor guidance. And sometimes you've seen companies miss on EPS or miss on revenue, but because they provide good guidance, they're going up. Wall Street is looking for guidance in a recession potential year. Now, EPS 5 versus 4 cents adjusted. So that's about a 25% increase. That's beautiful. Revenue also came in around about 5% higher here. So 525 versus 506 million expected. Great, great, great double beat there on top. A couple little headlines here, right? So the commercial revenue was up 26%. Very, very good. That is their main market, the US, right? The government contracts, they were up. The customer count, that was one of the big things that people were criticizing Palantir for in the past, was that they only had a limited amount of contracts, and most of them were government contracts. So now you see their customer count, so in terms of different customers, increased 50%. That's absolutely amazing, growing from 103 to 155. Very, very good growth in terms of their different customers here. Positive net income, obviously. Alex Karp said the company expects to remain profitable each quarter through the end of the year. This was the main thing that Wall Street loved. is that they guided, is that, you know, people were thinking they might be shaky because they may only have 1 quarter of profitability, then go negative, or maybe only 2 quarters. No, he affirmed that they will be profitable for the rest of the year. That is very, very, very good news for the company itself. Now, they also spoke a lot about the artificial intelligence upgrades that they were doing. And obviously, this company has been a leader in terms of AI over the last 5-6 years, but only now, as the AI buzzword catches on, people turn to Palantir and see what they're doing there. So very, very, very good company. They have a lot of IP, so a lot of proprietary data and tools that they are using that customers cannot find anywhere else in the market, right? So very, very, very good news for Palantir as a whole. If we look into Palantir in terms of a few financial metrics here, right? So if we look at the revenue, this has never been a question. Palantir has always been able to grow their revenue, right? So very, very good. If we see, ever since coming public back in 2020, they've been able to basically 2x their revenue stream, right? So very, very good. Not only are they increasing revenue as a whole, but they're increasing their customer count too. So everything is looking in the right direction. I love to see revenue growth like this for a company. Now, in terms of gross profit, so before expensive, gross profit has always been up as well. So as you can see, over the past 3 years, they have doubled their gross profit, which is very, very good for the company as well. Love to see a chart like this. Operating income, so how much they're bringing almost to their bottom line, right? So as you can see, they were burning a lot of cash earlier, and now they're able to control their expenses so as to bring margins into profitability. This has been absolutely amazing for Palantir. You can see it here on the net income chart. I'm not too sure why it shows negative. If we look at Palantir here, they are running a actual profit on a quarterly basis, right? So slight margins here, net income of 30 million last quarter and 17 million this quarter. They will be making over $20 million a quarter in the remainder of the year, which is very, very, very positive for them. So as you can see, one thing that I did also want to point out for you is the price ratios, right? So the PE ratio has been coming down. Well, obviously it was negative, right? Because they weren't earning any money. But as we can see now, I'm not sure if it's going to update, but Palantir is trading at roughly now, I think it's about on a forward basis, I think they're trading at about a 40 times or 35 times, something like that, which is relatively high. But keep in mind, guys, they just came into profitability. So that ratio will kind of be off. So that's why it's not best to look at it in terms of that. If you want to look at something like this, you really have to kind of look at in terms of price to sales. So they are looking at price to sales now, 20 billion market cap. They did bring in around $2 billion last quarter. So they're just over a 10 price to sales, which is high, but this company is growing at a somewhat exponential rate, right? So those ratios do have to catch up. It's very, very good for the company, however, that they're able to maintain profitability. And in my opinion, this is just your start of the S-curve for this company, even though they've been in business for a while. Okay. So if we're going to look at one last thing here, what I wanted to show you guys is the shares outstanding. So shares outstanding, a big point of contention earlier for Palantir was share dilution. People were concerned that they were paying executives too much in shares, and a big concern was the share dilution. Well, as you can see, guys, over the past year and a half, they have stopped doing that, right? So they have stopped diluting investors more and more, which is a really good metric. This is the one metric that I had a bit of a problem with in Palantir at the beginning, but now since the share price has come down so low and they've stopped diluting their shares and they are profitable now, it becomes an investment for me that I'm willing to take the risk on. So if we can see, before doing that, I just wanted to show you the analyst expectations, right? So our average expectations are about $9.55. We're kind of there now with our today's price, right? Today trading just around $9.55, right? So we are trading right in line here with our, So we are trading right in line here with our analyst expectations, right? So the average right here is slightly below. We're right above here at 9.55. Our maximum here target is 15 and a low target is 5, which in my opinion is, slightly overdone, right? Palantir here, the analysts, as you can see, are mixed. So they've always been mixed on this stock. People seem to either love it or hate it. We have 3 strong buys, 9 holds, so most people are right in the middle. And then we have just as many sells, slightly more sells on the sell side in terms of analyst expectations. So they've done a great job. Congratulations to Palantir bulls. If you took some profits, congratulations. For me, this is more of a longer term hold because I think Palantir is really going to be able to spread its wings in 2024, 2025, 2026. So that's what I'm there holding for. On a technical basis, you can see that we've done a great job here. I want to take it out to the monthly, right? Because we've been in a monthly and weekly downtrend now for so long that it's finally good if we can close a month up here, right? We may be able to set a first monthly uptrend since launch. So this is something that I'm really looking forward to seeing. Can we break our highs of 1016 in either May or June to confirm a monthly uptrend? That would be step number 1. I'm looking for on the weekly. What did they do? They did a great job. As you can see, guys, we were kind of in a weekly tightening range here. We were at a risk of losing the weekly uptrend, right? We had a high, low, lower high, and people were nervous that they would make a lower low, which would confirm a weekly downtrend. But with earnings, they rejected that, and they were able now to kind of change it up on them. So remains to be seen if we can set a new weekly uptrend. We need this higher low compared to this guy right here. So watch out for that. If Palantir is able to hold on to its gains, we may top out near the most recent high of about 1015, 1020, and then we'll be looking to set a lower high compared to this guy down here at 725 to consolidate and form a weekly uptrend. That is what we want to see. Obviously, levels to the downside now. You have to hold 725 to keep this weekly uptrend intact. New weekly uptrend, right? Obviously, with earnings this large, there's a large gap to be filled here, but it's good that we've created a lot of space. Now there is so much space to set a potential weekly higher low and confirm the uptrend, right? So that's the one good thing, a lot of space. There is a gap to be filled though between around 867, which was the low of today, all the way down to 787. So about $1 worth of gap. Like I said, when this move tops up here, we're getting high on the RSI. When this move tops out, remains to be seen. Can bulls hold it, right? Can we hold? I don't know why this keeps getting in the way. Can we hold and confirm the daily uptrend? What you don't want to see is bears pull back too deep into this move, because the deeper they go, the most likely scenario becomes a tightening range at that point. It's very, very tough when bears come all the way down, let's say, to then V-shape. Very, very, very difficult. You saw it here, right? So big bull move up. Bears took back the entire move. And what happened? We got a tightening range kind of within the lower levels here. So it was very, very messy. So you want to see bulls hold the higher level of this move here so that they give themselves the best odds to confirm a weekly uptrend and a daily uptrend at the same time. So congratulations to all bulls. So that's pretty much all I wanted to cover for the 3 stocks. As you can see, Palantir, future levels, if we do crack 1016, next stop up is around 1168. And then we just need to continue to follow it up. We are trading above our moving averages now, which is good. Weekly MACD pointing up. The daily also is obviously pointing up, but a bit overextended after the earnings move, which is completely normal, right? 20-something% in a day. You're obviously going to be overbought. But the key is you don't want to give any back. And if we do start weekly uptrends, then you just have to follow the higher highs and higher lows until they pretty much give out. And should the company keep performing well, we could obviously grind higher. So that's what I'm looking out for on Palantir. Congratulations if you were able to get down here. If I wouldn't have a position here, I would be looking for my pullback. I want to see the higher low and how far bulls are going to let the bears pull back. That's what I'm waiting for to see if I would not have a position. It's kind of tough to be an aggressive bull and buy up here. Obviously, FOMO is never a good thing. So just be patient. Wait for them to set the higher lows, okay? Wait for them to set the higher lows, because then it's easy, right, to enter and set stops if you want, or at least you're waiting for a better price for a long-term investment. It's always tough to buy the highs, especially after a big run like this, right? So that's pretty much it for all 3 stocks, guys. I hope you enjoyed the video. I hope you didn't get too beaten up over PayPal or Airbnb. Like I said, I still love the companies, still very bullish for their next 2, 3, 4, 5-year outlook. And on the flip side, if you were a Palantir holder, congratulations. If you don't own the company yet and you're looking to get in my opinion, it's always best to be patient. Obviously, do as you wish, not financial advice. That's just how I personally trade. So hopefully everybody had an amazing day and that you guys were profitable in your trades. I love you guys. I'll catch you in the next one. And don't forget to like and subscribe. And if you like the video, consider checking out my daily market recaps. I do them every single day, and we go over most of the major tech names and stocks in the industry, the indexes, and obviously earnings plays when they do come out. So take care, guys. I'll see you soon.